How did a single tiny burrito shop tucked away in a converted ice cream parlor in Denver, Colorado, explode into a global fast casual empire worth tens of billions of dollars? For over 2 decades, Chipotle Mexican Grill wasn't just a highly successful restaurant chain, it was a cultural religion. Wall Street called it the absolute, undisputed future of American dining, a business model so wildly profitable that every major corporation tried desperately to copy its layout. But rapid corporate growth often creates a dangerous illusion. What happens when the very philosophy that made you a multi-billion-dollar titan becomes your ultimate fatal flaw? What went so catastrophically wrong behind the scenes that the entire brand nearly collapsed overnight, wiping out half of its stock market value and triggering a federal criminal investigation? Today, as this culinary giant orchestrates one of the most high-tech, aggressive operational turnarounds in modern history, scaling to thousands of digital-first locations, the ultimate question remains: can a company truly rewrite its DNA, or does a dark, silent shadow still haunt every assembly line it builds?
To truly understand the dramatic collapse and rebirth of Chipotle, we have to travel back to July 13, 1993. A young, ambitious chef named Steve Ells opens a tiny 850-square-foot storefront on East Evans Avenue in Denver. Now, Steve Ells was not an ordinary fast food hustler looking to flip cheap burgers. He was a pure culinary artist, having graduated from the prestigious Culinary Institute of America and worked as a high-end sous chef in San Francisco. Ells viewed food through a luxury lens. His lifelong dream was actually to open a fine dining white tablecloth restaurant. The problem? Fine dining takes massive upfront capital. To generate quick, reliable cash to fund his real dream, Ells decided to launch a temporary experiment. A simple, no-nonsense burrito shop based on the massive mission-style burritos he had seen in California. Armed with an $85,000 loan from his father, Ells designed a concept that broke every single rule of the traditional fast food industry. In 1993, the quick-service industry was dominated by heavily processed, frozen, and prepackaged goods. Fast food meant cheap, greasy, assembly line items wrapped in paper. Ells's vision was a radical, aggressive rebellion against this paradigm. He insisted on using fresh, whole ingredients, complex marinades, and classical cooking techniques. He calculated that if his tiny shop could sell just 107 burritos a day, he would break even on his father's loan. But he was completely wrong. Within a single month, the line of customers wrapped around the block. The store was regularly crushing its target, selling well over 1,000 burritos every single day. The sheer demand was overwhelming. Ells quickly realized that his temporary cash cow experiment was turning into a cultural phenomenon that would change the trajectory of American food culture forever. As word of mouth spread throughout the late 1990s, Chipotle transformed from a local Denver favorite into a booming regional threat. But scaling a food business across state lines requires massive capital and a bulletproof supply chain. In 1998, the ultimate corporate plot twist occurred. McDonald's Corporation, the undisputed global titan of fast food, noticed Chipotle's explosive growth. Looking to diversify its portfolio, McDonald's made an initial minority investment. Over the next few years, that investment swelled into a multi-million-dollar cash injection, with McDonald's taking a controlling majority stake in the company. But this was a classic deal with the devil. On one side, McDonald's brought unparalleled operational muscle. They handed Chipotle the keys to their elite real estate analytics, refined their supply chain logistics, and provided the financial runway to scale at an impossible speed. Chipotle weaponized this cash, skyrocketing from just 16 locations to over 500 restaurants across the United States. But beneath the surface, a fierce psychological war was being waged over the brand's identity. McDonald's executives wanted Chipotle to operate like a traditional burger joint. They pressured Steve Ells to add drive-thrus, introduce breakfast menus, and utilize cheap frozen ingredients to maximize profit margins. But Ells fiercely defended his culinary borders. He refused to compromise on the open kitchen design, where customers could watch their food being assembled directly in front of them. In 2001, Ells doubled down on his philosophy by launching the Food with Integrity mission. Chipotle committed to serving naturally raised meats, local produce, and dairy free from artificial hormones. By 2006, the cultural and operational friction became entirely irreconcilable. McDonald's wanted to focus entirely on its core burger business and decided to fully divest from Chipotle, letting the company launch an initial public offering on the New York Stock Exchange. On the day of the IPO, Chipotle's stock price did something legendary. It doubled on day one. Now independent, completely cash flush, and validated by Wall Street, Chipotle was unleashed. Between 2006 and 2015, Chipotle was an absolute juggernaut. They didn't just enter cities, they dominated them. They created a brand new dining category known as fast casual. It offered the speed and convenience of fast food, but with the quality, ethics, and elevated experience of a sit-down restaurant. Their marketing campaigns were brilliant and deeply disruptive. They put out animated short films criticizing mass industrial factory farming, positioning themselves as the heroic, healthy alternative to legacy fast food. Customers wore their allegiance like a badge of honor. Eating a Chipotle burrito wasn't just a quick lunch choice. It was an ethical statement. By mid-2015, Chipotle was operating more than 2,000 locations. Their average unit volume, the amount of money a single restaurant pulls in per year, climbed toward an astronomical $2 million. The company's stock was trading at an all-time high of over $750 per share. But as any historian of corporate empires will tell you, the moment of absolute, unchallenged dominance is precisely when a company is at its most vulnerable. Chipotle's massive differentiator was its hyperlocal, decentralized supply chain. They relied on thousands of independent farms delivering raw, unpasteurized ingredients directly to individual restaurants daily. It was fresh, it was ethical, and it was a logistical nightmare. The company was growing at a speed that its decentralized food safety infrastructure simply could not support. The trap was set. In October 2015, the empire hit a brick wall. It began quietly with a cluster of severe health reports coming out of Washington and Oregon. Dozens of customers were flooding local hospitals with severe stomach cramps, bloody diarrhea, and kidney complications. The diagnosis was terrifying. Shiga toxin-producing E. coli O26. Public health officials immediately tracked the genetic footprint of the bacteria back to local Chipotle restaurants. Before corporate headquarters could even grasp the scale of the crisis, the outbreak spread like wildfire across 11 different states, infecting dozens of people nationwide. The media frenzy was immediate and ruthless, but the nightmare was far from over. While the Centers for Disease Control was still hunting for the source of the E. coli outbreak, a completely separate, devastating blow landed in December 2015. A massive norovirus outbreak tore through a Chipotle location in Boston, sickening over 140 college students, including members of the Harvard basketball team. Weeks later, salmonella outbreaks were reported in Minnesota. The corporate irony was absolute, brutal, and devastating. The brand that had spent a decade labeling its competitors as dangerous, chemical-laden factories was now literally making its own cult following physically ill. The immediate aftermath was apocalyptic. Chipotle's lines vanished overnight. Restaurant sales plummeted by nearly 30% in a single quarter. Billions of dollars in stock market value evaporated into thin air as the stock price cratered by 50%. The Department of Justice and the FDA launched a sweeping federal criminal investigation into the company's food safety history. Chipotle went into complete panic mode. In an unprecedented move, they shut down every single restaurant across the United States for an entire day to conduct emergency food safety training for tens of thousands of workers. They spent millions of dollars launching mass marketing campaigns, giving away millions of free burritos via text coupons just to convince terrified consumers to step foot back inside their stores. But the damage to the brand's psychological trust was structural. Activist investors revolted. They argued that Steve Ells, with his stubborn culinary focus, was fundamentally unsuited to run a high-risk mass supply chain. Under intense pressure, the visionary founder Steve Ells officially stepped down as CEO. The empire was fighting for its literal life. Chipotle was faced with a stark choice: evolve or die. In 2018, the board of directors made a high-stakes blockbuster hire that would rewrite the future of the company. They brought in Niccol, the legendary marketing and operational mastermind who had previously saved Taco Bell. Niccol looked at Chipotle with an analytical, clinical perspective. He realized that while the food quality was excellent, the operational infrastructure was dangerously outdated. He immediately decentralized the food safety risk by moving high-risk prep work, like chopping tomatoes and dicing cilantro, to highly monitored, centralized prep kitchens. But his real masterstroke was turning a burrito company into a technology powerhouse. Niccol introduced a revolutionary layout adjustment inside the restaurants, or the second make line. This was an entirely separate kitchen assembly line dedicated solely to digital, mobile app, and delivery orders. This meant that online orders no longer clogged up the in-person lunch line. To complement this, he engineered Chipotlanes, custom-designed drive-through windows built exclusively for app order pickups. Niccol's digital foundation proved to be a goldmine, allowing the company to thrive through global disruptions. When Niccol departed to take over Starbucks, the operational torch was passed seamlessly to leadership expert Scott Boatwright as Chief Executive Officer. Today, Chipotle operates with the precision of a Silicon Valley tech firm. Under Boatwright's vision, the executive suite has been weaponized with elite-tier hires, including Fernando Machado as Chief Brand Officer and Arlie Sisson as Chief Digital Officer. The financial performance tells a staggering story of total corporate resilience. By the first quarter, digital sales accounted for a massive 38.6% of total food and beverage revenue. Quarterly revenue hit an unbelievable $3.1 billion, representing a 7.4% growth year over year. To scale this momentum, Chipotle is deploying automated digital make lines and cutting-edge kitchen equipment across its network. Even when facing modern economic headwinds like stubborn inflation, supply chain pressures, and rising labor costs, the company is moving aggressively. They are on track to build hundreds of new restaurants, pushing toward a long-term North American target of 7,000 total locations. Chipotle didn't just survive an existential health disaster, they completely engineered the modern blueprint for how the global restaurant industry functions. Chipotle Mexican Grill proved to the corporate world that even the most toxic, devastating brand crisis can be reversed if you are willing to completely overhaul your operational identity. But what happens when a legendary company becomes so blindingly successful and builds a monopoly so massive that it completely loses its ability to see a changing world until it's far too late? If you want to discover how an iconic tech titan ignored the future, blew a multi-billion-dollar lead, and handed its entire empire over to its rivals on a silver platter, click right here to watch our deep dive analysis on the tragic blunders of another legendary institution. Thanks for watching. Icons in Flux. Make sure to hit subscribe, and we will see you in the next episode.